Hello, ladies and gentlemen. Hope you're excited for this one because it's the first time I've done a single stock in a video for quite a while actually. I'm going to give you my analysis of none other than Apple stock, as you see on your screen right now, as well as give a price target where I believe it'll be at 1 year, as well as 5 years from now. So we'll do that at the very end. We're going to get into what exactly is going into Apple stock right now, where's the value coming from, and if you're not interested, whether this stock's worth buying or not. So obviously, I need to preface this by saying I have a little bit of skin in the game, there's no doubt. If you know this channel, you know Apple's one of my bigger holdings, no doubt. Two portfolios I'll show to you here. We've got our Robinhood portfolio, in which we've got 21.5 shares at an average cost of $46.83. So already significant return on this one. Massive return of 174% so far on my position. Really nice there. We've also got Apple in our M1 Finance portfolio, where we own 17 shares at $73.95 a share. So massive skin in the game still here. Multiple thousands of dollars we've got in Apple stock alone. So it's definitely a position I'm pretty interested in. And return here is massive as well, as you can tell. So there's skin in the game here for Apple stock. So we're going to go into what's actually relevant here for Apple stock. Well, first we got to check the valuation. I think it's the most important thing when you're analyzing a stock. You check the valuation first and foremost, because you got to understand where the value is, right? Is this stock valued highly, or has it got a cheap valuation? From there, you can determine what the company is producing, what the business looks like, and maybe see what you can see there. So if you look from a valuation standpoint, this is definitely one that has earned a somewhat high valuation in terms of the market cap. This is the first $2 trillion company ever. So $2 trillion market cap on Apple right now, $2.17 trillion seems very high. This whole company as a whole, it's valued at $2 trillion. Kind of hard to fathom that number. But when you get into numbers like the PE ratio and forward PE ratio, you kind of get a somewhat shocking number here. Trailing PE on this company, trailing 12-month PE ratio of 29. Seems incredibly cheap for a company trading at such a high market cap. A PE ratio of that stature when the whole market is trading over 35 seems pretty crazy, because you know Apple, I know Apple. Forward PE ratio of 26. I mean, good grief. We're talking cheap. The forward PE ratio of the market is over 30 still, of the whole S&P 500. So that begs to differ. Just based off this valuation, you might expect this company is going to be probably a company that's, less than the average company in the S&P 500, right? It would be a lesser company than that based off this valuation, this PE ratio. Price to expected growth of 2, still pretty cheap. Based off some of these metrics, you really wouldn't expect this company to be too much. But then we get into the revenue line here. I always look at the financials as well. We look at the revenue, and I'll look at a breakdown of this as well by segment, because that's very important. But if you look just at the total revenue, this is quite shocking too. Trailing 12-month revenue of $325 billion kind of puts into perspective what that $2 trillion valuation is for. When you look at it in a broad spectrum, you're only talking about really 6 or 7 times this value, this revenue, is where you get your valuation from. And that's not even including forward revenue estimates. And that comes from 2020, where they only put up $274 billion. The year before that, they put up $260 billion. So you see this massive jump. It's quite a shocker. They went from $275 billion to $325 billion, $50 billion increase in revenue in a matter of a year. Now that is shocking, in my opinion. I think that is incredible how they're able to manage such a fantastic thing. So based off of those metrics alone, I gotta be honest, I sent just a little scent. I sense a scent of just a little bit undervalued. Based off that PE ratio, to see a company growing revenue by that significant of a margin, Seems crazy. But we need to know what the company is producing as well. What is this company in terms of, is it not a diversified company? Is that why the valuation might be a little bit cheaper? Well, you go to the website, obviously, you see a brief overview of everything that they sell. Obviously, you start off here with the iPad, their tablet, which obviously right now has been doing some gangbuster numbers, but it includes their brand new Apple M1 chip. Finally, a chip they've made in-house. They haven't been making chips in-house prior. They've been using Intel. Now they went to make their own chips, and surprisingly, based off of reviews I've seen, this Apple M1 chip is actually incredible in terms of performance. And I can guarantee you it's a lot cheaper in terms of production because they're making it in-house. But I've seen in terms of performance, this chip is doing fantastic things. Battery life is incredible. But just overall speed of the device has changed drastically due to this M1 chip. We also have the iPhone, the staple of the company. If you know Apple, you know iPhone, first and foremost, because it's the largest segment of their business. iPhone, they're obviously here flaunting their purple new iPhone 12, but their iPhone has been doing incredible numbers. iPhone 12 has been doing just gangbusters in terms of sales. People have been upgrading their phones really, and I think we could have expected this because of the 5G revolution. Now that 5G's come into play, everyone's going to be upgrading their phone to a 5G iPhone, and if they didn't this year, they're going to be doing it next year because everyone's going to want the newest, latest, and greatest. And if you buy iPhone, you always, I just got to be honest, most people who buy iPhone get the upgrade every year. Just throwing it out there. I personally wait like 3 years before I switch my phone, but you Apple people, you know who you are. You upgrade every year. I know you do, okay? We've got none other than the Mac. Everyone knows the iMac. Come on now. Mac, obviously, their computers. You'll see a lot of it in a corporate sense. You'll see a lot of Macs. Typically, corporations tend to buy Mac. Don't know why, but it's a pretty common thing. I've also heard great things. Great things for them in terms of they also have the Apple chip, the in-house chip in these Macs. I've heard great things about their performance. Obviously, very pricey pieces of technology, but I've heard the performance is really good. So Mac continues to do pretty well. We've got on the left here the Apple Watch. The number one wearable company in the world is Apple. You talk about their smartwatch and what they're able to do. So on top of that, their Apple Watch not only gets them diversified into the wearable segment, but also into the healthcare industry. Because of the fact that this company is able to track all of your vitals, from blood pressure, heart rate, this tracks that. Your Apple Watch tracks that. So it's really good for people who are interested in that, and it's very helpful for people who are watching those vitals. They'll want an Apple Watch. It's good to see. It'll track steps. It'll do really everything you could want it to, as well as calls, music, whatever you could really want. The Apple Watch provides it. So pretty crazy. And their tagline is the future of health on your wrist. So again, they have some stake in the game with the healthcare industry. We also have the Apple AirTag, the newest innovation by them. The Apple AirTag, which some of you have seen devices, I believe Tile is another one that makes them, but this is something you put on the device as you see that. Think about this. We got this great phone here. Bow! You stick a little thing on it and it tracks it. So that way there's no way you can lose it. Just sticks on the back of it, and then from any other device you have, you can track where that is at all times. So pretty exciting to see in terms of that. That is definitely going to be beneficial for a lot of people. And a lot of people will probably be purchasing that, not only necessarily for just their phone, but it could be for their watch, could be for any device really. So AirTags, newest and latest and greatest, they'll be doing some good stuff there. We have Apple Fitness, that's right. We get into the services segment, and this is a company that has really massively improved in terms of services. You've got Apple Fitness, which is a subscription program, right? Another thing that gets you into health, so they obviously provide videos, workouts, give you all the helpful information you need. We've got Apple TV. What do you expect? Apple TV, not only the device itself, but we also have the streaming platform. Everyone's got their own streaming platform now, but Apple TV, obviously they're working on creating a lot of originals. They're going to get people interested, but just another segment that this company is diversified in. They're making entertainment. This is an entertainment company as well. On the far right, you see Apple Arcade, another subscription service, where this company makes games, right? They make games now. The biggest industry right now in terms of growth. I mean, video game industry has been going bonkers over the last year and a half, and Apple Arcade is going to benefit off that because for a monthly fee, you can access this catalog of games really just ad nauseum whenever you feel. And then on the left here as well, we've got none other than the Apple Card. I mean, if this company couldn't get more diversified, they include the banking segment in there too. This company also has financials in it. It's also a financial company. You wouldn't have thought about it, but they include the Apple Card. Now, as far as the production, or really the use of this overall, I haven't necessarily seen any data regarding Apple Card, how many people are necessarily creating accounts this way, but I'm sure plenty of people are because they make it convenient for their platforms, I'm assuming, to use the Apple Card. And 3% daily cash back on purchases from Apple when using the Apple Card. That's right. So 3% cash back, pretty good for them. So I'm sure this is going to be something that gets some traction to it at least because some people open up way too many credit cards. And Apple's going to benefit off that as well. Why not? So just based off of this, how much this company is already producing, this is one of the most diversified companies I've ever seen in so many industries. And on top of that, we've also got the rumored Apple Car potentially in the next couple of years. The car launch is expected between 2024 and 2028. I don't know what that looks like, but if they get into the freaking automobile industry, what more can this company do? And I think it's personally, I believe it's 100% possible. But I do want to break down revenue by segment because there are questions in terms of revenue growth you might have. So this is a chart of every single segment for them, from iPhone to Mac to iPad to wearables. And let's go into every single one. Let's start with the iPhone. iPhone revenue, it's always pretty steady, but you usually see Q1s have been pretty solid for them typically because that's usually when the new release of iPhones come out. So Q1's always pretty solid for them, but overall you've seen consistent an overall uptick since 2013. Then we get into the Mac segment. Why not? Mac, pretty steady, nothing super crazy except for the last couple quarters. They've seen a lot more growth. So Mac has been a steady winner in terms of billions of dollars. We're talking floating around the $6 billion mark consistently. We've got iPads. iPads, they were showing a slight decline in iPad sales as tablets were a little bit phasing out as we had really our own tablets, right, in our phones, right? Tablet need wasn't necessarily there, but they've seen some uptick in demand yet again over the last year. So it's curious to see what that looks like. We have the wearables segment. Now this is where the company shines quite a bit. You see the significant growth in wearables, home, and accessories, typically here led by the Apple Watch. It's incredible to see these numbers. It really is. Seeing what they're able to do. It's crazy. Then we also have the Apple services. Now this is a chart that is literally the most picturesque revenue growth chart you've ever seen. You see that? Steady. It's steady growth. It's beautiful. So services is really taking over on this company. $15.7 billion last quarter alone. The growth here is significant. And I'm expecting really good things to continue in the future because of all the diversifications they have in this services segment. They're going to be doing some good numbers. And on top of it, let's just throw in Apple. They pay a dividend too. Only a 0.68 yield, not too significant, but a payout ratio of 17% means they've got plenty of room for more. 5-year growth rate of 9.4% and 8 years of dividend growth. The company pays a dividend as well because if the stock wasn't good enough looking for you, here it is. So beyond any doubt, I believe Apple stock is a buy. Let's get into my price targets. So as you see Apple here, look at that lovely handwriting up top. Few people can do it better than me. Few people have handwriting better than me. Now, if this was actual handwriting, it probably wouldn't look much better. But The fact that I had to do it on a mouse makes it look worse, okay? So here we are with a 1 year and 5 year estimate. So the high estimate really, for me, is estimating that everything is working out for this company and things are looking really good. So for my 1 year estimate, let's say this is going to be ending May of next year. I believe the high estimate on this company is $170. Some people may say it's a little low. I don't get necessarily super aggressive as some of those people you might see. So some people, not going to say names, but let's just say that ARK Invest will tell you that the stock's going to go 5 million% up in the next 5 years. Not trying to call out anyone, but I'm very much realistic with my estimates, and I've been in the market for a while, and there's potential, but I like to tailor my estimates to actual reality. So my 1 year estimate high for Apple is going to be $170. I think by May of next year. It could be $170. And there's reasons why my estimates are a little bit lower here. And I'll get into that at the end. But my personal estimate, I think by the end of the year, I think Apple's going to be worth $150. Seems pretty low, all things considered. I think it deserves a lot more valuation. I do believe it should be valued so much higher than that. But I honestly believe the market is probably going to see some slight downturn this year. I do think that it'll be a stagnant period. Maybe not downturn, but I do think there will be stagnation. And I think that's going to impact the broader market, which impacts Apple. Apple, it's been hard for this to be a breakaway stock lately because people just they've been focusing so much on other companies that are pretty well garbage. New IPOs, SPACs. I mean, people have meme stocks. They've been focusing on all of these that they haven't seen the real quality companies. And I believe that trend will continue, and Apple's going to get a little bit of a rude push to the side. My low estimate, though, 130, sitting around where it's at. That's where everything really stays stagnant for the rest of the year. It's possible. My 5 year estimate, pretty low, I will say. The high here, I would put between 400 and 450, most likely. That is, as everything comes into play. This is excluding the Apple Car. I didn't quite include it in there, but even in the 5 year estimate, it probably would be in there. But again, we're estimating this is 2029 or 2028 release potentially. Without the Apple Car, this stock I think is going to be worth $400 to $450 in 5 years, which is incredible growth, by the way. I just want to mention that. You're talking about a stock that's going to go 3x in 5 years, would be quite incredible. But I think it's personally possible. And that's mostly based off of just the hype of the Apple Car included in there, not necessarily actual production included. My personal estimate is going to be closer to 350, which is going to be really 3 times where it's at right now still, which is a very still high estimate. But I think this company deserves that much valuation. And I believe based off of the service growth, this company will deserve that valuation, and it'll get there. And my low estimate, still 250, pretty darn high. Still expecting the stock to double in the next 5 years. But I don't think that's necessarily unfair to say that's my low estimate. I mean, I don't see anything possibly that's going to be in the way of this stock right now over the next 5 years. I don't see it at all. We have maybe downsides with the Apple versus Epic trial, which I don't see necessarily going Epic's way, just going to be honest with you. But that's what I got for you today. Hope you really enjoyed this. That's my opinion of Apple stock, and I hope you take that into consideration and you consider buying this one.